Welcome in. In this video, is there a 5,000% chance of XCN going up? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand.
Price structures moving within an uptrend provide very strong signals to investors in the world of technical analysis. Especially when prices touch this trend line, it is often considered a significant reaction point. This line indicates that buyers in the market are still active and that the upward momentum is ongoing. The fact that the price is currently touching the rising trend line marks a technically critical stage. If the price reacts upward from this level, it can be interpreted as a strong and positive signal that the uptrend will continue. An uptrend is a price structure that forms higher lows and higher highs. This structure shows that market participants are increasingly eager to buy during each pullback and want to push the price to higher levels. Therefore, touches on the trend line are often considered buying opportunities. The price currently touching this trend line is a key point of observation for investors. If the trend line holds and the price bounces upwards, this technically indicates that the trend is still healthy and valid. The importance of trend lines is not limited to technical appearance. Psychologically, these lines also create a sense of security for market participants. Prices reaching the trend line are often seen as opportunities by investors, as these levels have previously been tested multiple times and have received strong buying responses. The current contact with this line may trigger the same psychological process once again. In this context, an upward move from this level could ignite a new wave of bullish momentum. Additionally, as long as there is no closing of the price below the rising trend line, this line remains valid in technical analysis. The current position can therefore be viewed as a retest occurring above the trend line. If this retest is successful, meaning the price bounces up with one or more green candles, a strong expectation for a continuation of the trend emerges. This can increase investor confidence and trigger additional buying. For the uptrend to remain valid, it's not enough for the price to simply stay above the line. The candlestick formations that occur at this point are also critical. Especially high-volume green candles confirm that the trend line is holding as support. If such candles form now, it indicates that buyers are still in control of the market. This would be a strong technical signal that a new bullish wave is beginning. Situations like this can offer both short-term buying opportunities and pave the way for medium to long-term uptrends. Because trend lines are often tested multiple times, and if each test is met with upward reactions, the reliability of the trend line strengthens. Considering the current touch alongside previous reactions, this event could reinforce the strength of the trend and boost market confidence. If the price bounces from the trend line, technically a new higher high can be expected. This means the higher high, higher low pattern would continue, and the price could reach a new peak. If that happens, investors may be more inclined to open positions, believing the price will move higher within the trend channel. This increased buying pressure can lead to a quicker rise in price. On the other hand, timing is another important factor for these trend lines. In technical analysis, trend lines serve as support not just in terms of price, but also in terms of time. The price has now reached this line both technically and temporally. This increases the likelihood of an upward reaction from this point. If the price reacts strongly during this time window, it could be taken as a strong signal that the uptrend will continue. Moreover, a bounce from the trend line can be supported not only by technical reasons, but also by positive news or shifts in market sentiment. If this technical setup is accompanied by positive developments, trust in the trend line increases, and investors may start buying with higher volume. This could push the price to higher levels more quickly. Especially in highly volatile markets like crypto, such technical fundamental combinations can lead to major price moves. The rising trend line can also be a tool for observing the actions of large investors, such as institutions. These lines often align with buying zones used by so-called smart money. If volume increases and large buy orders appear when the price reaches this line, it can indicate that institutional investors are watching this level and entering positions. This makes the upward move even more reliable. At the same time, how many times the trend line has been tested is important. Each test can either weaken or reinforce the strength of the trend. However, if the price is consistently bounced upward from this line, it adds to its credibility. The current touch could be another link in this chain. If the price reacts upward, again, it confirms the trend line is still valid, which is a very positive sign in technical analysis. For investors, these kinds of touches are also useful for setting stop-loss levels. If the price dips slightly below the trend line but closes the day above it, that still signals an ongoing trend. Investors can adjust their positions accordingly and continue to benefit from the trend. Finally, the price touching the trend line in this way gives the overall chart structure a more positive appearance. These types of patterns influence investor psychology and help maintain positive sentiment in the market. This boosts the confidence of both retail and institutional investors and can result in an increase in buying activity. The current contact with the rising trend line and the potential for a bounce here renews investor belief in the trend. The resulting buying pressure could pave the way for the price to reach much higher levels. But we can't make decisions based on trend lines alone. So let's take a look at some other metrics as well. Stay tuned.
The RSI indicator is one of the most commonly used tools in technical analysis, especially for assessing price momentum and determining whether an asset is in overbought or oversold territory. This indicator is represented by a line that fluctuates between 0 and 100. When the RSI rises above the 70 level, it indicates overbought conditions, while it dropped below 30 indicates oversold conditions. However, beyond this basic information, trend structures that form on the RSI and whether those structures break or continue can provide valuable insights into potential price movements. In the current scenario, we're clearly seeing a rising trend structure on the RSI. The RSI value has touched this ascending trend line. If the RSI bounces upward from this trend line, it would be considered a very positive and promising signal from a technical standpoint. The rising trend itself means that the RSI is forming higher lows and higher highs over time. This indicates that buyers in the market are becoming increasingly eager and strong, while selling pressure is relatively weak. In a momentum-based indicator like RSI, the presence of this kind of uptrend suggests that buying activity is gaining strength, positive momentum is building, and buyers are in control. Therefore, the fact that the RSI is currently touching this trend line, with the potential to bounce, could signal the beginning of a new upward wave in price action as well. An RSI bounce from the trend line typically increases the likelihood that price will also form a bottom and begin moving upward. This is because RSI gives insight into momentum. Rising momentum means buyers are more willing to push prices higher. In this context, a bounce from the RSI trendline may be viewed as a new buy signal by investors. This signal becomes even more meaningful if it coincides with the price being at a strong support level. In such a scenario, both price and RSI may be rebounding from support at the same time, often one of the strongest buying opportunities. In these types of situations, it's also important to look at past RSI performance. If the RSI trendline has been tested multiple times in the past, and each time resulted in a bounce to higher levels, then the trendline is considered a strong technical support line. Strong support on the RSI usually correlates with similar support on the price chart. If RSI bounces from support, the likelihood of an upward move in price increases. At this point, one of the most important strategies for investors is to take a position if the RSI bounces and begins to move upward. Of course, this alone isn't enough to justify a buy decision, but when combined with other technical signals, it becomes a strong indicator. Furthermore, trendline breaks on the RSI can also produce significant signals. However, in the current scenario, the RSI has not yet broken this trendline. Instead, it has approached it and is now facing the possibility of a bounce. Therefore, in the coming days, it will be critical to closely watch whether the RSI moves upward from this level. If it does, and forms a higher high, this would confirm the continuation of the uptrend and signal that momentum is increasing. Such a scenario reinforces positive market expectations and may lead to a rise in bullish investor sentiment. The potential bounce from the RSI trendline also provides psychological comfort to investors. These types of technical levels are tracked not only by algorithms and technical analysis software, but also by thousands of human eyes. As a result, reactions to these trendlines often reflect collective psychological behavior. If thousands of investors believe the RSI will bounce from this level and take positions accordingly, the likelihood of the bounce actually occurring increases. In this way, some levels in technical analysis function as self-fulfilling prophecies, and RSI bounce from the trendline could just be that. An upward bounce from the RSI trendline can also help prevent negative divergence. For example, if the price is making a new low but the RSI is forming a higher low, this is called bullish divergence and is often a sign of an upcoming upward move. However, if both price and RSI are at lows and the RSI bounces from its previous low, this can be even a stronger bullish signal. It shows that both price and momentum are turning upward together. In such cases, the market is likely to gain both technical and psychological strength, possibly beginning a new uptrend. A bounce from the RSI trendline is not only encouraging in the short term, but also in the medium and long term. Especially when this trendline appears on a daily or weekly chart, a rebound from RSI support may signal the start of a longer-term upward move. These kinds of strong technical patterns often lay the foundation for multi-week or even multi-month rallies. For this reason, investors monitor RSI behavior not only for short-term trades, but also for long-term positions. If the RSI has bounced from this trendline in the past, it strengthens investor confidence and increases interest in the market. This situation may also lead to a rise in trading volume as more investors interpret this positive signal and move to buy. Higher volume makes price movements more powerful and decisive. In technical analysis, RSI reversals backed by volume are considered more reliable because both momentum and market participation are increasing. If a bounce in the RSI is accompanied by successive green candles in the price chart, this confirms the trend is gaining strength. Additionally, this RSI movement becomes even more meaningful when analyzed alongside other technical indicators. For example, a bullish crossover on the MACD, a price bounce from an ascending trendline, rising volume, and the RSI bouncing from trendline support all together can form a very strong buy signal. These types of signals are closely followed by professional investors and algorithms and can often be precursors to major upward moves. In conclusion, the current rising trend structure seen on the RSI and the fact that the RSI is now touching this trend line marks a very critical technical situation. If the RSI bounces upward from this level, it would indicate that both momentum and market sentiment are turning positive. This kind of RSI movement strengthens the likelihood of continued upward price movement and can offer investors valuable opportunities. For that reason, this technical setup should be closely monitored and analyzed in conjunction with other indicators. A bounce from the RSI's rising trend line initiating an upward move is a very positive signal for both short-term and long-term investors.
The cup and handle formation is a well-known and widely followed pattern in technical analysis, considered a powerful setup by many investors. Especially when it forms on long-term charts, its potential impact can be much more striking. In the example at hand, the cup and handle formation has clearly developed, and the price is currently on the verge of an upward movement from the handle area. Technically, this presents a highly positive outlook and suggests a price target equal to the depth of the cup. This potential target, measured by the height of the cup, indicates a possible price increase of 5,000%, which represents a massive upside opportunity for investors. To begin with the technical structure of the formation, the cup and handle pattern typically appears in markets that are recovering after a prolonged decline or sideways movement. The cup part forms a rounded structure where the price bottoms out and then gradually recovers upward. This process usually takes time, months or even years. The handle portion follows this phase and is a shorter term, typically slightly downward sloping and low volume corrective move. Once the handle completes, the price generally breaks out upward and a target equal to the height of the cup is projected. In this case, analyzing the current chart shows that the structure presents a price increase potential of 5,000%. The volume component of the formation is also crucial. In cup and handle formations, volume tends to be low during the cup phase. However, a noticeable increase in volume is typically seen when the price breaks out from the handle. This indicates that investors are beginning to take action and that buying pressure is increasing in the market. Therefore, from a technical perspective, once the cup completes and the breakout from the handle occurs, a bullish rally is expected to begin. Even if the breakout hasn't happened yet, considering how close the price is to this level, it's highly likely to occur in the short term. After the breakout, investors typically calculate the target based on the cup's depth and begin to take long positions accordingly. That said, it's important to remember that this 5,000% potential increase is only a technical formation target. For it to materialize, both technical and fundamental conditions need to align positively. Technical formations alone may not be sufficient. However, a strong technical setup can psychologically encourage investors to lean toward the buying side. This, in turn, significantly increases the likelihood of the pattern playing out successfully. In the current case, the cup and handle structure is clearly formed, and the price consolidating in the handle area suggests that this movement is ready to be triggered. The price movement that follows the breakout from the handle, especially when accompanied by rising volume, is particularly important. If high volume supports the breakout, it increases both the reliability of the formation and the attainability of its target. A breakout without volume support often fails or results in a false move. Therefore, volume analysis is of great importance in technical patterns like the cup and handle. The fact that volume is gradually increasing in the current price chart may also signal that a breakout is imminent, potentially offering investors a valuable buying opportunity. In the scenario where the formation completes and a breakout occurs, we must also consider the possibility of sharp price increases even in the short term. Cup and handle structures of this size often signal the beginning of major rallies. Particularly in the cryptocurrency market, such technical patterns can lead to sudden price surges as investor interest rises. This demonstrates that the formation can yield not only theoretical, but also strong practical results. For example, many cryptocurrencies in the past have experienced gains of over 1,000% after forming this pattern. Therefore, a target as aggressive as 5,000% is not impossible in the crypto world. This is especially true for projects with low market caps and high potential. In such cases, buying pressure has a stronger impact on the price, which can lead to sharp upward movements. For this reason, the fundamental data behind the token or coin where the pattern has appeared also plays a crucial role. Of course, these kinds of large targets typically unfold over the long term. Expecting such a significant increase in just a few days or weeks is unrealistic. However, reaching this target over the course of months or even years is possible. For patient investors, this pattern offers a great opportunity. If the price continues to consolidate for a while, then makes a clean breakout and begins an uptrend supported by volume, this 5,000% target could be reached gradually. Psychological resistance levels should also be taken into account. The price level that aligns with the cup's target will likely be an area where many investors take profits. Therefore, as this level is approached, the price may fluctuate or face corrections.
However, such pullbacks usually present new buying opportunities. In strong formations, price typically experiences multiple corrections before reaching the target. At this stage, patience, discipline, and a well-planned strategy will determine investor success. In conclusion, the currently observed cup and handle formation is sending very positive signals. The price being in the handle area suggests that a potential breakout is near, and such a breakout could lead to an increase equal to the depth of the cup. This theoretical increase offers a massive 5,000% potential, but it requires all conditions of the formation to be met and market dynamics to support the move. From a technical perspective, however, this structure provides investors with a clear direction, and the opportunities that arise from such patterns can turn into significant gains when approached with the right strategies. Therefore, the cup and handle formation should always be carefully monitored in technical analysis as a highly valuable and high potential pattern.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.